Price has a memory. The levels where it reversed before are where it tends to reverse again. And as a swing trader, those levels are the single most useful thing on your chart. This is the key level signal of the Confluence method. Let me show you how to find the ones that actually matter and ignore the rest. A level isn't magic, it's memory. When price rallies to roughly the same area and sellers keep stepping in, that's resistance. When it falls to an area and buyers keep absorbing, that's support. The more times a level is tested and holds like these, the more traders are watching it and the more it matters. Here it is on real price. Notice the program drew the support and resistance straight from where this stock actually turned over the last several months. Not arbitrary lines, but the prices where real buying and selling happened. Those are the levels you build trades around. Here's the trap that stops people out needlessly, treating a level as a precise line. It's a zone. Price routinely pokes through by a few cents or a few percent to grab stops before reversing. Draw your levels as bands, give them room, and stop getting shaken out one tick before the turn. And the most useful behavior of all, role reversal. When price finally breaks through a support level, that old support flips and becomes resistance on the retest and the reverse for resistance. Watch it here. The floor breaks, price pulls back up to it, and the old support now caps the move. That retest is one of the cleanest entries in swing trading. Let's turn the level into an actual trade. Price falls back to support around 110, and instead of slicing through, it holds and prints a reversal. That's your entry right at the level. Your stop goes just below support, around 108, because if support truly breaks, you won out cheap. And your target is the other side of the range, the resistance up near 119. One clear level hands you the entry, the stop, and the target. The entire trade defined before you risk a cent, with reward several times your risk. Now the most common way traders bleed money with support and resistance, taking trades in the middle of the range in no man's land. There's no edge there, no level to lean your stop against, and no clear target to aim at, so your risk reward is a coin flip. Discipline means waiting, sometimes for days, until price is actually at a level you marked in advance. Patience at the edges, nothing in the middle. That one rule alone fixes most people's results. And one last thing, because support and resistance is the key level pillar of the Confluence method, not the whole thing. A level tells you where to act, it does not tell you whether to. You still want structure pointing your way, momentum confirming the move, and a trigger candle right at the level. The level sets the stage, the other three signals are what tell you the trade is actually real. Trade a level alone and you are guessing. Trade a level with the full stack and you have an edge. So, price has a memory, the best levels are tested repeatedly, treat them as zones not lines, and watch for the role reversal on a break. Mark the level, wait for price to come to it, then trade the reaction, confirmed by the rest of the stack. Get this one signal right and everything else in your trading gets easier. Subscribe for the full method and trade your own plan. This is education, not financial advice.